Welcome, everyone. Today is February 25th, 2026, and we just witnessed a day in the East Asian markets that might very well be a major turning point. We're going to break down exactly what went down, get into the why behind it, and talk about what it could all mean going forward. And this, right here, is the number of the day 6,083.86. That's the official closing bell for the KOSPI. This officially kicks off what everyone is already calling the KOSPI 6000 era. I mean, what a truly massive milestone. So that leads us to the big question on everyone's mind, right? How in the world did we get here? What forces were powerful enough to drive this surge? And maybe even more importantly, where do we possibly go from here? Let's dig in. Here's our game plan. We'll start with the raw numbers from today. Then we'll unpack the big ideas behind this KOSPI 6000 moment. After that, we'll jump over to China and see what fueled their rebound. From there, we'll look at some hard forecasts for the future, and we'll wrap it all up with a solid strategy for navigating these markets. Okay, first things first. Before we get into any theories, let's just look at the cold, hard data from today's closing bells across the region. The numbers alone tell such a fascinating story. You've got the KOSPI just exploding higher, up almost 2%. China's tech-heavy Shenzhen market also had a great day, up well over 1%. But then you look at Korea's KOSDAQ, and it went absolutely nowhere. It was basically flat. That right there is a huge split in the market. And this chart just makes it crystal clear. The story of the day wasn't about everything going up, not at all. It was like all the money, all the energy flowed into two very specific buckets, the big blue-chip Korean stocks and the big tech names in China. Meanwhile, the smaller stocks got left behind. Investors were definitely picking their spots today. Okay, so that's the what. Now for the really big question. Why? Why did this happen? To really understand it, we've got to go a bit deeper than the price tickers. We need to explore some pretty powerful ideas that help explain how the Korean market didn't just climb, it literally broke into a new stratosphere. So let's start with this concept called time preference. It sounds a little academic, but it's actually super simple. It's just about patience. Are you more focused on getting paid today, or are you willing to invest and wait for a much bigger reward tomorrow? When a whole market starts thinking about tomorrow, that's a sign of a really healthy, forward-looking economy. It's a huge psychological shift. And boom, look no further than today's auto stocks for a perfect example. Hyundai and Kia went on an absolute tear. And that wasn't about how many cars they sold last month. No way. The market was looking years down the road, saying, wow, the value of their future AI and EV technology is massive. That, my friends, is low time preference in action. Okay, here's another idea that kind of flips things on its head. We usually think that good news makes people feel optimistic, right? Well, what if it's the other way around? What if a collective, positive social mood is what actually creates the good news? The feeling comes first, and then reality follows. This is exactly what we've been seeing in Korea. For years, there's been this thing called the Korea discount, where Korean stocks were just valued less than their peers. But now, people are starting to believe that's finally ending. This widespread optimism about reforms and inclusion into developed markets, it created this incredibly positive mood that basically willed this rally into existence. It became a self-fulfilling prophecy. And hey, this isn't just some gut feeling or a nice theory. The math is actually backing it up. We ran thousands and thousands of simulations, and our models are showing a 72.4% chance that this momentum keeps going and the KOSP actually hits 6,500 sometime in March. Now let's switch gears for a second and head over to China and Hong Kong. Their markets also had a pretty solid day, but the story over there was driven by a completely different but just as powerful set of forces. What you had here was basically a showdown. On one side, you had political noise, threats of higher tariffs. But on the other, you had institutional stability, the U.S. Supreme Court pushing back. And for the market, the message was loud and clear. The rule of law is stronger than the political noise. And that sigh of relief helped fuel a rally. And on top of that, you had China's central bank just playing it cool. For the 9th month in a row, they kept rates steady. They were basically sending a message to the market saying, nope, we're not going to create a fake boom with cheap money. Instead, they're focused on real, sustainable growth. And the market absolutely loved that discipline. So this is all great, but where do we go from here? That is the million-dollar question, isn't it? Well, for that, let's stop guessing and see what our data-driven models are telling us for the month ahead.
All right, here are the numbers, plain and simple. For March, we're projecting the KOSPI to push toward that 6,500 level, and we're seeing similar potential upside in the KOSDAQ and in China. So what's the big takeaway? Basically, our models are signaling that this party probably isn't over just yet.
This timeline really puts the whole story into perspective. Our analysis shows the market hit a solid bottom back in January. February, this month, was the ignition, the rocket fuel, and that makes March the big test. If the KOSPI can clear that 6,500 hurdle, it could be the signal that we're entering a real long-term supercycle.
Okay, so theory and forecast are great, but how do you actually use this information? How do you turn analysis into a real, actionable strategy for managing your risk? That's exactly what we're going to cover right now.
Our entire strategy really boils down to 3 simple ideas. First, trend following. You swim with the current, not against it. We only focus on things that are already in a strong uptrend. Second, volatility targeting. We use models to make sure we're not getting reckless. And third, we pay attention to the calendar, using big predictable events to our advantage.
So here's what that looks like in practice. You can see a heavy 50% weight toward Korean stocks. But what's really crucial here is that big 20% slice for cash and bonds. That is not dead money. That's your safety net. That's your dry powder to manage risk and jump on opportunities.
And listen, none of the other stuff matters without this. This is the golden rule. Risk first. Always. Our framework is built on a strict, automatic stop loss. If a trade goes against us, we cut it. No hesitation, no second guessing. That discipline is everything. It's how you stay in the game long term.
You know, when you put this all together, it really comes down to this one powerful idea. KOSPI 6,000 shouldn't be seen as the finish line. It's not the peak of the mountain. It's the gateway. It's the start of a whole new chapter for Korea on the world's financial stage. So I'll leave you with this to think about. It really feels like the rules of the game are changing right before our eyes. So the question we all have to ask ourselves is, are we ready for it? Is our strategy stuck in the past, or is it actually built for the future that's unfolding right now?